Hi, everyone. Hi, welcome to She Invest by StashAway. My name is Stephanie Leung, and I'm your host tonight. I'll be presenting to you Thematic Investment, and also a special guest from Global X will be joining us for a panel session. So without further ado, let me share my screen and we can start. So tonight we're going to speak about the second series in our masterclass by StashAway. The key topic for tonight is investing in your beliefs. And we have a whole series of webinars and activities centered around the She Invest initiatives. What we're really trying to do from StashAway is to contribute to closing the gender investing gap. What we've seen is that compared to men, women tend to live longer, but also tend to defer financial planning to their partners, and often would take time off to look after the families. All these require some more knowledge or investment in taking care of the financial needs, personal financial needs for women. Reason like living longer means that you need to kind of start to plan retirement earlier and to better plan for retirement, defer financial planning to the partners, mostly, I guess, also because women actually lacks the maybe a bit in terms of confidence in terms of financial planning, and especially if we take time off to look after our families, we need to plan better for the time that we're not working. StashAway is, of course, very committed to help to solve the gender investing gap by giving many resources to our female investors and to empower our female investors to take control of their own personal finance. This year, as our kind of initiative, we're launching She Invest by StashAway. So this is our first step in hoping to bridge the gender investing gap, but expect more from us in the coming kind of months and even further. Now, before we dive into the presentation, I guess we just wanted to share a little a small snippet of statistics, which is actually something I personally find as very interesting. So I guess a bit of my background as well. I'm the deputy CIO of StashAway, and I'm also the head of StashAway Hong Kong. I guess I'm one of the 11.8% of portfolio managers who are women, because my whole career has been spent in managing portfolios for different institutional investors, including banks such as Goldman Sachs, and also other family offices and asset managers. However, I guess female portfolio managers are, really a underrepresented group in the world of finance and investment management, and only less than 12% of portfolio managers are women, and this is based out of a pretty sizable number of portfolio managers that were surveyed. We're seeing, I think, not a lot of changes in recent history. So we need to do better in terms of pushing for gender diversity, even at an institutional level. So what is our agenda for tonight? We have three main topics that we like to just go through with all of you. Number one is centered around thematics and kind of talking a little bit about the four areas which we're very, very excited about at StashAway. The second topic is ESG investing, and of course another very, very hot topic in recent months. And then lastly, how do you approach thematic investment and ESG investing from a portfolio diversification point of view? So let's, without further ado, let's dive into the first section for tonight. Firstly, an introduction to thematics. So thematics has been an investment trend that has caught on really in the last 2 or 3 years. And when we talk about thematics, the reason why we're so excited about it is because it's really about investing in your future and what you believe in. And the reason why we say this is because if you look at this this chart here, is basically what we call an adoption curve. More specifically, this is a technology adoption curve. So as you can see, the curve is actually S-shaped, and it starts from the very beginning of a technological adoption. So at the very left are the very early stages. So for example, when the technology is still being innovated to being adopted by some early believers and testers, and then maturing into early majority and late majority, and lastly, it becomes like massively produced and massively adopted. So the rate of change slows down. And on the y-axis, adoption is exactly referring to the rate of growth of that particular technology. So a technology starts to really pick up or grow very, very quickly as it enters the early adoption and early majority stage. And that growth actually slows down when it becomes late majority and laggards. Now, when we talk about thematic investing, I mean, we're really investing in trends that are in the accelerating part of the adoption curve. So if you look at the adoption curve here, you can see a lot of sub themes or interesting technologies, or some buzzwords that you've been hearing on news, or when people talk about financial investments. Things like artificial intelligence, robotics are obviously at the early adopter stage. Fintech, which of course StashAway is part of, is in early majority. I mean, you've all opened like StashAway accounts. You may have, depending on where you are, you may also have like virtual bank accounts, for example. And social media, including like Facebook, Instagram, etc. I mean, those are kind of late majority. Like all of us almost interact with them on a daily basis already. So when we talk about thematic investing, we're really investing in the early stage of the adoption curve. And these are technologies that have the potential to become widely adopted and to be able to change the world for the coming years. And we are, as StashAway, we've identified 3 thematic areas which we're most excited about. And these 3 areas are technology enablers, future of consumer tech, and also healthcare innovation. And not surprisingly, of course, we've also launched products around these 3 themes that we think are just trends that everyone should pay attention to. So we're going to be talking about these 3 themes. The first one is called technology enabler. How I like to describe this is, I mean, these are very, very important infrastructure, technology infrastructures that power a lot of things that we use and see. But these are technologies that we actually can't touch, or as a consumer, it's sort of behind the scene. And in technology enablers, I mean, what are some of the most exciting things that we're seeing these days? Number one, of course, artificial intelligence. I actually, when I was in university, and when I did my master's, I was actually I did a computer science degree, and my degree was specialization in artificial intelligence. However, I must say that the artificial intelligence that I used to study is vastly different from the artificial intelligence technology that are available right now. For example, we didn't have things like neural network or deep learning, and we were mostly focusing on natural language processing. So it was actually very, very different. But the technology has made so much advance in recent years that it's been able to be applied very, very widely to a wide range of problems. Robotics, again, AI actually empowers robotics So the new robots that we're building are able to learn things by themselves and be able to be a lot more useful than before. Blockchain is also another technology that we're very, very excited about. And I mean, we're actually going to have our next webinar next week talking specifically about various blockchain technologies and cryptocurrencies investing. Fourthly, cloud computing. This is relatively more mature. It's been around since Amazon launched the cloud in 2008. So this has been the technology that's been around for more than a decade, but it's still going strong. So cloud computing is something we use already almost every day. For example, we all use you may use Gmail or Google Drive or even AWS, but the corporate adoption is still pretty early stage, and there's still a lot of growth. And lastly, semiconductors. Of course, we all have chips sitting on computers for a long time, but there's also new technologies in semiconductors that are powering the next level of technological growth. For example, the chips that are used for gaming or blockchain, VR, AR. I mean, those are actually very, very different from the chips that power our PC. So when we talk about thematic investment, specifically talk about investment opportunities, I think it's important not to get too caught up in the day-to-day market price change, but have a clear, clear roadmap or clear view of where that market or where the opportunity set is. Let's take two examples here. So robotics is currently, or as of 2020, was a $250 billion market, meaning that people consume or companies in the robotic market have revenue combined $250 billion. And based on, there are industry forecasts by 2026, that number grows to $510 billion. So this represents actually a 12.4% CAGR over the course of 6 years. If you look at artificial intelligence, this currently is a $30 billion, or as of a year ago, is the $30 billion market. But by the time it gets to 2026, industry forecasts it to be $300 billion, and this represents almost a 36% CAGR. So, of course, these are projections, but I guess the magnitude of the CAGR or the direction of the CAGR is also very, very impressive. So instead of focusing on the day-to-day market movement, focusing on the CAGR means that you can expect to have that level of growth over a medium to long-term period. And as we all know, when we invest in companies or sectors, what we get is the earnings growth or the revenue growth of that particular market. So you can expect that, for example, if you invest in AI with a CAGR of, let's say, north of 20%, the investment returns should be proportional to the market size CAGR. So these actually represent very, very exciting opportunities for us as growth investors. There are other key segments in robotics and AI, which I wouldn't go into, but I think about applications. Like, for example, self-driving vehicles and drones also make a lot of use of robotics and AI, which is why I said these are technologies that are used in different areas, but that it's like sort of behind the scene. Blockchain is another kind of behind the scene technology, and that's the screenshot that I show here is actually the very, very first Bitcoin ever produced. And it's, as you can see, it's just a bunch of, zero and ones and numeric letters. But this has actually fundamentally changed the world since its first launch. And the I mean, blockchain is often very much confused with cryptocurrencies or Bitcoin. So here we'd like to just give you a very simple diagram to differentiate what these are. So very, very simply, blockchain is the technology, and cryptocurrencies are basically blockchains that have monetary value that you can assign a dollar value to it. And Bitcoin is the biggest cryptocurrency by market cap. And the next question to ask is then, so actually, what is a blockchain? If you think about blockchain and you split up the word, it's more easily understood. So block refers to a record, and chain is actually a network. So it's basically a network of records. It's actually a P2P network that stores and records transaction. So peer-to-peer network basically means that there's no centralized server or centralized authority. And the great thing about the chain, the reason why we need to have a network is to make it non-mutable. So once a transaction is recorded, you cannot go back and change it. And then also because of the network nature, you don't need a permission to be able to participate in the network. So it's open to everyone, and you can pretty much review, or you can go onto the web and see every transaction that ever happened in the network. So it's completely transparent. The blockchain is also a technology that's not just used for cryptocurrency, but if you think about that circle, there's a big part of the blockchain that is not tied to monetary value. And blockchain can actually be used in many other industries, from the supply chain to healthcare records to many other uses. So blockchain as a technology is powering a lot of other innovations in various industries. Now, the next part after you understand the blockchain is, what is a cryptocurrency? Cryptocurrency, short form crypto, is simply a blockchain that has a monetary value. So as I said, Bitcoin is one type of currency. It is currently the biggest currency by market cap, is roughly 30 to 40% of the total cryptocurrency market cap. And there are actually more than 10,000 cryptocurrencies. But I would say over 90% of them is actually probably worth very little. There are other blockchains and so-called cryptocurrencies. Ethereum is the second biggest cryptocurrency, and it's basically a blockchain that is very much used in finance. NFT, which is getting on with a lot of attention these days, it's a blockchain to basically for art, for digital art. There are other examples of blockchain. For example, Mana is a blockchain for the metaverse, and there's many other different uses. And there are again segments that benefit from the blockchain and the rise of digital assets, and these are just several groups. The miners are we call them miners, but it's actually how the Bitcoin specifically and current Ethereum would verify transactions. So when you participate in verifying a transaction, you are rewarded by the network with mining fees, and these are miners. Hosting services, of course, like AWS, for example, hosts some of the service. And there are other hosting services, and then also exchanges. So some of the exchanges that have gone IPO include, for example, Coinbase, which you can buy on the US market. And then lastly, of course, equipment manufacturers, as I said before, some semiconductors are specifically used for mining of Bitcoin. So those manufacturers also benefit from the rising use of the blockchain. Here's a chart that shows Coinbase, which is one of the biggest exchange globally, in terms of their share of trading divided into institutional trading, i.e., trading by funds and family, like kind of family offices versus retail trading. As you can see, I guess cryptocurrency is maturing to become a more institutional asset class. In 2018 Q1, so this is like actually a little more than like 3 years, of close to 4 years ago, 80% of the trading was done by retail and only 20% was institutional. Fast forward to Q3, I'm sure the figure is higher today. It's almost a reverse. And the trading volume grew from 56 billion to 327 billion. So a six-fold increase in a matter of just almost 4 years. That's a very, very fast growth rate. And going back to the adoption curve, here we are plotting where we are for crypto assets, and we're seeing currently we're sitting at around 3 trillion if we take the market cap for all cryptocurrencies. But as we move forward in the adoption curve, you can see that there's tremendous growth opportunities. Next, we'll talk a bit about the consumer tech, and here consumer tech is the technology of everything that we can kind of touch and see. So it includes e-commerce, fintech, gaming, etc. It's quite straightforward, so I won't talk too much about it. And it basically benefited from the digital economy, especially after the developments post COVID, because we're all spending more time interacting with technology. For example, at StashAway, we're seeing more customers having accounts with us. They're much more comfortable dealing with their personal finance on the mobile phone. And the digital economy quickly is expanding from 7.8% of GDP in 2005 to 9.6% of GDP in 2019. And this represents an annual growth rate of 6.5%. As I mentioned before, when you think about investments, think about how the end market is actually growing, or how fast the end market is actually growing. So an annual growth rate of 6.5% is definitely faster than GDP growth. So this is an area that is worth investing in for growth. And as you can see, the digital economy is already a top contributor to GDP growth in the US, but it's still growing. So it can become actually the biggest share of GDP growth in the US, kind of overtaking other more traditional industries. For example, real estate and manufacturing. As we all know, technology, US workforce is moving towards the more technologically leading or advanced. So we can expect to see digital economy to be growing in the coming years. Lastly, we'll talk a bit about healthcare innovation. So even before COVID, healthcare has been changing, but what we've seen since COVID is actually how quickly or how far we've come in several areas such as genomics and biotechnology, mainly in the vaccines that has been developed. Very quickly, genomics is basically just a study of our own selves, right? A very, very detailed look at what makes up the human DNA. And what it helps us to do is to be able to, address health issues or address kind of diseases in a way that has never been done before. And COVID was actually one very, very good example of that. And here is just a list of the diseases that have a big impact on the population and that can potentially be solved by genetic techniques. Cancer actually being a very, very top of the chart because it's basically affecting a huge population and there's lots and lots of innovation going on in treating cancer. Here we're showing again the impact of I guess healthcare innovation on our fight against COVID. I'll just kind of focus on the top left hand chart, where you can see that since the beginning of the COVID pandemic, the number of genomes uploaded, which means that these are kind of databases that are collected collectively by scientists across the world. I mean, that has accelerated dramatically, especially in 2021. And this actually, you can see, I mean, this curve actually looked quite similar to the adoption curve. So it's showing that accelerating growth even in these healthcare areas. And then the next section is about ESG investing. So ESG is actually a short form that stands for environmental, social, and governance. It's something that is kind of like a buzzword these days. But if you look at a level deeper, I mean, these are actually very, very important issues. Environmental, I don't need to spend like that much time, I guess, talking about it. I mean, we all are experiencing kind of impacts of global warming and I guess air pollution, etc. So I think it's already kind of surrounding us. Social is an interesting kind of angle. I mean, we talked tonight a lot about kind of gender investment gap. Here, it's gender and diversity policies is definitely on the top of the social issues. Other kind of social issues are, for example, like labor standards, human rights, etc. Governance is also very, very important to assess for a company's financial success, and that includes, for example, how independent the board is, etc. ESG is, if I kind of look at there's also a spectrum of ESG versus impact investing and philanthropy. So ESG investing is more closer to traditional investing because you also, I mean, while you kind of focus on sustainability and social impact, you also care about financial gains. And in fact, when we look at ESG kind of investment returns, when we look at like the actual data, ESG as a factor, i.e. companies with an high ESG scoring, actually perform better than those companies lower on ESG scoring from a financial returns perspective. So that's why we should pay attention to ESG, because not just because we believe in ESG, but also because it actually brings in it brings in better financial return. And this is how we look at like ESG from a more quantitative point of view. There are actually ESG scoring providers that would score each company on based on the criteria that we listed before in previous slides. And at StashAway, we kind of take an average of various ESG providers' scores to score our ETFs. And yeah, this is a slide that I was referring to, basically talking about how ESG is a positive return driver. We actually compare ESG with a few other drivers. So for example, common factors include value, size, momentum, etc. And I guess the only consistent return driver that we've found is quality and ESG. So ESG is as an investing factor also works. And then also one reason why we need to pay attention to ESG now is because of the government drive. It starts in Europe, but we're increasingly seeing it like kind of propping up in Asia regions as well. So with the government driving ESG initiatives, more and more company needs to comply with that, and that is that will for sure drive a lot of investments in this area. For example, of course, I mean, in Asia, China is one of the biggest economies, and China has announced that they will target to have a zero kind of net zero carbon emission policy by 2060, and there's a lot of initiatives going behind that. And again, looking at from a growth perspective, ESG assets have been growing very, very quickly. And in 2014, just a few years ago, there were about kind of, I guess, 15 trillion AUM globally invested in ESG assets. And I mean, that number is already kind of tripled to today, and that is going to grow even further in the coming years. And for sure, I mean, we think that ESG is here to stay, which is why, I mean, we also launched our ESG products, namely the ESG version of our core portfolio, and also the environmental portfolio. So here is the environment and clean tech areas, and it includes clean energy, clean water, storage, et cetera, et cetera. So lastly, where do we go from here? Thematic, as I mentioned several times, it's really not about the day-to-day. It's about the long term. It's about the CAGR that we expect in the next few years or even decades. And so the first question is to ask again, how much risk can you take? Like when you invest in a certain thematic, would you be comfortable with the risk that associated with that? Because inevitably, when you look at these kind of early stage investments, the market volatility can be bigger than some of the traditional investments, such as bonds. So to assess your risk, you need to ask yourself two questions. Number one is your time horizon. Number two is your personal risk preference. So I think these were topics that have been discussed in last week's seminar. So I won't go into detail, but basically the principle is the longer the time horizon, the more risk you can take, and also a good way to gauge your kind of risk profile or risk appetite is to ask yourself, what is if my portfolio is down 8%, like for example, X%, let's say 10%, 20%, can I still sleep at night? Can I not look at the market? Can I still continue on with my day-to-day work without worrying too much? So StashAway has, when we think about thematic investment, we are also cognizant of the different levels of risk that each person would be comfortable with. So we constructed our thematic portfolios. We also kind of combined our StashAway risk index with the thematic investment. So this is something that's quite unique and very innovative. So for example, if our investors invest in a certain theme, let's say technology enablers, investors can actually choose different levels of risk that is most suitable for them. And one thing which is very important to thematic investing is also to think about diversification, because basically you're betting on the very frontier of technology, and it's still very early stage. So you should take a VC approach in the sense that, number one, use broad baskets. So this is also why we've selected ETFs to go into our product, so that the ETFs actually would capture a broad number of companies. Some may fail, but it's fine because others may succeed. The trend is here to stay. You don't know which ones are going to play out, like which companies are going to be winners at the end. If you don't know how to pick the Amazon from the eBay, for example, then ETF is great. Secondly, think about thematic investment as a diversification or as a spice to add to your core portfolio, and then also, lastly, I think we should start early. as I said at the beginning, women tend to live longer, and we need to plan for our retirement or like non-work years better. So starting early gets you to the ending point sooner rather than later. So with that, I guess I'll end my official presentation, and feel free to post your questions on the Q&A, and we can discuss afterwards. And I guess we should also open up the floor to welcome our guest tonight, Morgane. Not sure if.
Hello, Stephanie.
Hi, Morgane. Nice to meet you.
How are you?
So
nice
for everyone, happy to present Morgane Delledonne, if I pronounce that correctly.
Yes, perfect. Thanks.
So Morgane is the Director of Research at Robotics ETFs. Very, very delighted to have you here tonight and to talk to us or share with us your point of view on thematic investing. So if I may have you start the session, maybe introducing a little bit about yourself.
Sure. Well, Stephanie, first of all, thank you for this insightful presentation. I agree. I couldn't agree more on your approach about thematic investing. So thank you for that. It was really clear and insightful. About myself, so I joined GlobalX in November 2020 when GlobalX expanded to Europe, and we started with 2 UCITS ETF, and now we have more than 22 ETFs in Europe. But joining GlobalX. I'm the Director of Research in Europe, and we're working very closely to our US research team and CIO team in the US. So I would say that in a nutshell, GlobalX's research-driven approach to thematic investing, and I recognize myself very much in this process because my background is in macroeconomics. And I worked for the public and private sector before as macroeconomist, following the US, and now more global and multi-asset type of strategist, investment strategist. So I couldn't be more pleased to be there today and discuss the thematic investment, but also broadening that topics to ESG and diversity, because I think these are the topics where you really want to focus on today.
Yeah, I guess it's interesting because both of us actually come from a macroeconomics background. And I think we're, of course, like being macroeconomists, we focus a lot on the cyclical kind of market cycles. But what's like most exciting, most interesting is actually some of these thematic trends. So if I can ask you the next question, can you share with us how you started investing in thematics, or what prompted you to start investing in thematics?
Well, as you said, coming from a macroeconomic background, you kind of look for the structural disruptive trends. And these are beyond the business cycles. It's more like what is fundamentally changing the society, what is driving the next economic models. And we can definitely identify 2 main trends. One is the transition to digital, and the other one is the transition to clean. And currently, our sector benchmark, which is the traditional way of investing and to invest money to reflect in portfolios, they are not really capturing these trends, because in these sector benchmarks, the companies that will be leading in the transition, in the transformation of our economy, aren't so much represented. In order to capture those structural trends, you kind of have to have an agnostic view from a sector and geographic standpoint, because most of these trends are global. Look, Stephanie, today, when you look at China, Europe, the US, they are all aligned around having a more circular economy, as you mentioned in your presentation before, but also having a transition to digital and clean. This is the first time we have these three big regions aligned in their commitment and objectives. So the tailwinds are there, but the problem is with current traditional way of allocation of allocating money, you kind of miss out on the opportunities, because when these trends will be well represented in this sector benchmark, this is probably when their growth potential will be reached. Yeah,
exactly. I agree. If you look at, for example, the biggest stock indexes, they disproportionately allocate to big caps. And big caps by definition, for example, if you look at the biggest market cap companies in the US, I mean, these are the FANGs, right? And the FANGs are not sitting at the forefront of the adoption curve. They're sitting at the later stage. So I mean, they're quite stable, but I mean, they don't capture some of the most exciting trends that are going on globally as well.
Absolutely. Just to your point, I think it's important to look beyond the umbrella of tech, because the fund aren't capturing the full size, the full disruptors that will create the digital economy. When you look at thematic, you look at sector disruptors, not just IT or consumer tech. You also look at hard tech or themes in the physical environment like climate change. So it's really looking. Thematic investing is probably sometimes mistaken with pure tech strategies, but actually it's far more than just tech.
Yeah, I agree. I definitely agree. And I think if I have to share my kind of first experience investing in thematics, I think back to before the financial crisis. So I remember, I guess, it's kind of exposing a bit of my age, but after I graduated, that was kind of early 2000s. I came back to Asia to start my. That was because I saw the growth potential in China and also Asia as a whole region. I still remember going to China for projects, etc., and seeing the tremendous growth there. And actually, back then, if you think back from the year of 2001 when China entered the WTO to the financial crisis 2007, 2008. The thematic du jour, or the thematic of the day, was actually emerging markets. We also I worked at Goldman Sachs, and we actually coined the term BRICS, BRIC, basically Brazil, Russia, India, China, and those were the rising thematics of the time. So that was also, nothing to do with tech, but it represented a lot of investment opportunities and growth. So yeah, I completely agree with what you're saying. It doesn't necessarily have to do with tech, but today we're living through a lot of technological advancement and innovation, which is why when people think about thematics, technology is an important part of that. With that, maybe we can talk a bit about ESG actually, because you mentioned a few things, a few talks about ESG, and this is outside of tech but also very, very exciting. So can you actually share with us, I guess, some of the latest trends that you're seeing in ESG, and also how everyday investors can get involved?
Yes, of course. So I think one of the slides I like a lot in your presentation was when you show the spectrum of ESG investing. So I would start with saying that there are different approaches to sustainable investing. It could be from exclusion and ESG filters up to impact investing, like investing in global water, for example. So it really depends on your appetite for ESG, your preferences, and your objectives. As you rightly mentioned, ESG is perfectly compatible with the pursuit of a goal, a financial goal. It's just adding a metric in how you select your investments. So I would say that through the thematic lens, sustainably themed type of approach would be to look at themes involved in climate change, for example. But when I say climate change, the beauty of thematic is that you can look at very niche part of the climate change related themes. It goes from themes around to capture the full value chain, you could look at themes around disruptive materials like copper or zinc or lithium, which will be the materials enabling the technology to transition to a clean net zero economy. But after that, you have all the clean tech, so the solar panels, the wind technology, the smart grids, hydrogen, all of these type of new technologies that will create the next generation of utilities. So these technologies will be bought by the next provider of energy, and will create solar energies, wind energies, hydrogen-based energies, and so on and so forth. So all of these capture the full kind of I don't like the label, but the full clean energy kind of value chain. And I think that is very powerful, because now that the market is developing, as an investor, you may have more convictions for just one of these type of clean technologies or clean energies. For example, in Europe, we achieved an important milestone last year, or even like 2 years before, when a couple of years before, when actually half of the energy produced in Europe comes from solar and wind energy and other clean technologies and clean energies. And this is important. This is the future. But you would probably think that, okay, for the next 50%, until we reach like 100% of clean energy, maybe my conviction is more towards hydrogen. And some people will prefer probably nuclear power and uranium. So I think what enables investors with Thematic Investing is to have these power of investing in what you believe the most. And sustainability is a word that is not understood by everyone the same way. There is a full spectrum of sustainable investments. You can have a very stringent way to see things in the sustainable front and have ESG screening for everything. But one thing I would remind investors is, when you invest in ESG today, unfortunately, if you use like too stringent filter, you might not reflect fairly the transition we are living in, because we are not at a stage where we could ESG screen everything, because we have the risk of not having a fair representation of the underlying market in our portfolio. So it might be the case that for some things that are more mature, like clean technologies, renewable energies, you can definitely apply some screenings. But in the tech space, and even like in mining for some disruptive materials, might not be yet possible to screen for ESG, but at the same time, if you want to reach your sustainable goals, you may need to invest in these disruptive materials. So I think it's a really, it's more of an art than a pure science, I would say, around ESG and sustainability.
Yeah, it's still a very, very much developing space in terms of like definitions, how we measure certain, I guess, metrics, and how we come up with different standards. But it's definitely, as you said, I think what you mentioned is very, very important. That it's an opportunity for us to invest in what we believe in, because when we kind of talk about investments, ultimately we're capital allocators, right? We like to allocate capital where we think we can make a change for our own financial returns goods, or for the planet's for the good of the planet, or like for whatever cause that we care most about. And that is I guess a good way to think about how we can use our own capital to make changes as well. And I think I guess you talk about like Europeans kind of energy source, and that kind of reminds me of like the recent conflicts at Ukraine, and how that like potentially would impact two very important energy sources of Europe, like namely fossil fuel oil and natural gas. And these are kind of the old type of energy that like the new technologies and energy can replace. So I would think that this actually plays into sort of some of the increasing needs for countries to become kind of their own independent, like energy independent, And I mean, it's also propelling governments to actually fasten the pace in development of like renewable energy as well. So I guess we don't have a lot of time left. Unfortunately, I still have a lot of questions to ask like that I'd like to understand. But maybe as a last topic, let's talk about like building portfolios and diversification using thematics or ESG. In that regard, okay, Morgane, can you share some of your thoughts?
Sure. So what I can see from our clients and also like what we suggest doing is to kind of use thematic to identify the sector disruptors. And so when you want to include thematic in portfolios, you could have a sector view and look at, for example, what is disrupting the financial sector, fintech, blockchain, for example, what is disrupting energy and utilities, CleanTech, but so on and so forth. You can also look at healthcare and how telemedicine and digital health or genomics are completely changing the future of healthcare. And so by allocating probably 5% if you're very conservative, to 20% if you're more aggressive or you have more conviction into thematic within each sector, kind of as a growth bucket. You not only use these buckets, this thematic investment, as a diversifier, because these thematic funds usually are very concentrated on companies that are usually underrepresented in sector benchmarks. And then you can also use it as a growth satellite within your portfolio. So this is kind of the way you look at thematic. And when you put all the things together, you can have a good view of the next sector framework, I would say. Maybe it's not the economy is not ready yet to probably invest only in these thematic funds. But when you look at the transition, this is probably the future of the sectors we have today.
Yeah, and I think we've tried to build that kind of capability in the StashAway app so that our customers can actually have the core portfolio and these kind of like thematic investments all at the same risk level. So for example, if your core portfolio is at, let's say, 30% StashAway risk index, you can exactly match that with your thematic investment in technology enabler, also selecting a 30% SRI. So it makes it easy to kind of build your portfolio that way so that your risk actually doesn't change, even if you invest in thematic portfolios. So I guess, we've learned a few things tonight. Thematics, how do you think about kind of investing in these thematics? Remember the CAGR and the kind of long-term growth is what you should be, and the potential growth is what you should be focusing on. Where the technology or that particular theme is on the adoption curve, drive those potential CAGRs and returns. Secondly, ESG is a spectrum of things, and but this is an opportunity for you to invest in your true beliefs and to actually allocate the dollar to the causes that you would like to change. Lastly, like when you build your portfolio, think about diversification, think about the risk that you can sustain. Again, risk comes down to your time horizon and also your personal preference. Lastly, we are in the second webinar of our She Invest webinar series. Next week, we have a very, very interesting topic, investing in crypto and NFTs. And we have our senior advisor, Vivian Koo, who is also a industry veteran, together with Charles DeHolsey. He is called Mr. MetaMask. So he is one of the very, very experienced crypto native person that we have. And he is the only male representative in our kind of She Invest series. So that should be a very, very fun webinar to have. I'll be also speaking. And then our fourth and our last series is investing in female leaders, which will be held on the March 8th, 2022. Again, thank you very much for dialing with us tonight. And lastly, as a special offer for our participants, we have a special code so that you can enjoy 2 years of free investing on your next deposit. So this applies to, I think, our existing customers as well as new customers. and we look forward to having you again with us in our upcoming webinars. Let's go through the questions. Okay. First question, how do you differentiate between blockchain AI, which belongs to technology enablers, and fintech, which belongs to consumer tech? Some fintech companies do have blockchain and AI elements in them. For example, some crowdfunding platform does have blockchain element in them. Are they mutually exclusive? So I guess this is a question for StashAway. When we built our technology enablers, of course, there are some overlap, but we're basically focusing on the companies that provide the technology and are most closely related to technology. For example, fintech companies with a very, very heavy blockchain focus would go into technology enablers. For example, Coinbase, because it's part of the blockchain ETF, that ETF actually goes into technology enablers. But it doesn't mean that Coinbase cannot go into fintech ETFs as well. So there are some overlaps. But the most important thing is what is a key driving theme for that particular ETF. Second question, how do you forecast Thematics performance? I guess I can answer that question, and Morgane, feel free to chime in. I think basically you can't look at it from a short-term perspective. It's very hard to predict what Thematics would do in three months' time. But we talk about time horizons that are much longer, like 3 to 7 years or beyond. So we need to be thinking about that time horizon, and the returns of that time horizon is directly tied to the revenue growth and the earnings growth of the companies that are involved or the technology that are involved. So that goes back to, for example, the market projections that I refer to and the CAGRs that I refer to. Morgane, I'm not sure if you have something to add.
Yes, I think two other considerations. The earlier you are investing into thematic, the better growth prospects you may have. This is referring the S-shaped curve, as Stephanie talked about in a presentation. But also, I think it depends on the type of schemes you're looking at. So a good way to start when you are looking at a conviction around a theme is to look at the addressable market, looking at also the number of services or products that are already commercialized, kind of to assess where you are at which stage you are along this S-shaped curve. And the second consideration with regards to growth prospects is potentially to look at valuations, such as price to sales and also sales growth trends, because for these growth-oriented companies, it's important to look at future growth, because usually you get a premium because these are long duration type of assets. So the earnings will come probably later on. So a good way to start is looking at sales growth metrics when assessing the growth potential of these themes.
Yep, thank you. Moving on to the next question from Patricia. If you had only enough money to invest in one thematic investment and add this to a portfolio, what would you suggest would be best for growth and returns in the long term? I mean, I'll take a step, and Morgane, you can chime in as well. So first of all, I'd like to say there's no minimum for StashAway portfolios. So even if you only have $100, you can invest in all our thematic investment portfolios and divide them. So this is I think the great thing about StashAway product. There's no minimum requirement. Secondly, I guess just my personal investments. I'm personally most excited about technology enabler, mostly because I'm more like a geeky background, so I like the technologies behind that. But Morgane, if you have to pick a technology or a theme, what would you pick?
It's a very difficult question, but I would say that one of my top conviction at the moment is around hard tech. So that includes disruptive materials and lithium battery tech, because hard tech is probably less vulnerable to volatility in the market or regulation changes. And due to the massive fiscal stimulus to make a change in the economy towards a net zero economy, I think these are the themes where we should see most of public and corporate engagement and therefore money. So I'm quite bullish on these hard tech themes.
Very, very interesting. And last question, also from Patricia. You mentioned about the gender investing gap and how women lack the confidence to invest. Do you have any hints or tips how we can boost our confidence in investing and continue education? It can be scary committing an amount of money because of the lack of confidence, and so takes less risk. Morgane, I'll let you answer that first, and then I'll answer that, and we'll round up the session.
I think first of all, I don't think ESG or sustainability is a theme per se. It's more of an overlay that we can add on Thematic. But I think that these initiatives towards more gender diversity are necessary to kind of force the change. And I think it's a good way to invest in ESG because of the social and government part that is pursuing more gender equality on boards at companies, because that way it forces companies that are probably less advanced in gender equity to kind of having an incentive to do so, and it's also rewarding the good companies who are more gender equal to continue to do so. So it's a very good way, and hopefully soon we won't have to invest in specific funds for this because we will have reached the goals on the gender equity side.
Yeah, and I would say, yeah, I completely agree with those. And if I think about my own investment journey, I mean, it was all about making mistakes, and taking small risk that you can afford. And I think, like, sometimes as women, we're a bit more conservative. We're a bit more careful. We think a lot before we act. But I mean, as with many other things, like, kind of, you learn from mistakes. Same from investing. So I start with a small amount. I play around with things. And I mean, that way, like, is the fastest way to gain knowledge. Secondly, I would think that the network is also very important. So, like, share your concerns with other kind of investors or your friends. Talk openly about investment. And then thirdly, I mean, StashAway is here to help, and I mean, that's why we're having these sessions. And I mean, we at the leadership level, we also have a very, very good female representation. So we're doing all the best that we can to help to close the gender investment gap. So actually, we have one last question, and this is a question for you, Morgane. Do the Global X ETFs incorporated in the StashAway thematic portfolios have ESG methodologies or screenings embedded in them? So I'll let you take that question.
Yeah, sure. So as I said during the discussion we had earlier, sometimes having an ESG screen is relevant for some themes, especially around the climate change related themes. So everything that is clean tech, renewable energy producers, wind, solar, hydrogen, that makes a lot of sense, or global water, for example. However, in the disruptive tech space, it's harder to have an ESG screen. It's also in kind of the mining type of themes like lithium or battery tech. The reason being that, unfortunately, if you want to have purity to a theme today, and if you want to have a fair representation of the underlying market, and you can't have too many ESG screens, because otherwise it will reduce your investment, the constituents that you can include in an index, and therefore might diverge from a fair representation of the underlying themes. So I think it's all about having a portfolio that reflects the transition. And when a sector is really advanced in ESG screening, then we can look at having more ESG screens within these strategies. But at the moment, unfortunately, when mining is involved or certain thematic is involved, certain tech is involved, it's harder to have an ESG screen on overlay.
Yeah, I mean, I'm sure we're all looking forward to more innovations and more kind of efforts to do that in the future. With that, again, thank you very much, Morgane, for being with us tonight. Thank you, everyone, for dialing in and participating. And I hope to see you all in our upcoming webinar sessions. Have a great night. Thank you so much.
Thank you. Bye.